Remember way back here when all the dollar bulls were telling us that the euro was going to collapse and the dollar was going much higher? Well, they're not looking so. Those predictions aren't looking so rosy at this point. Um, the dollar's been in a bear market, just like I said it was, and it started back in early 2017, and now we are watching as another intermediate cycle has left translated and failed. This was the last intermediate cycle low. You can see price broke below that. This particular daily cycle is getting a little bit mature, but we're coming on the basically the last line of support here at about 91. And if this breaks, there's really nothing to stop the dollar from dropping all the way to 88 before this daily cycle bottoms and we get another brief little bounce, something similar to this. This is what a left translated cycle looks like. You get a bounce of about 5 to 8 days, and then it rolls over and proceeds to continue to make lower lows and lower highs. All right, so I'll widen the chart out here. So you can see this 91 area. This was resistance on the way down, the first leg down in the bear market. This was a support level. Sorry, a support level that stopped this first major collapse. We get a brief little bounce, and then this intermediate cycle rolls over, and we come down and make our 3-year cycle low. And then the first bounce out of that 3-year cycle low comes up, tests this 91 area, has to back off for a few months before it can finally break through it. So we are at this last line of support here at 91 right now, and if this doesn't hold, if price breaks through this quickly, then we could just watch a complete collapse down to test this 3-year cycle low. And even if we do bounce here for a few days, I mean, I guess there's potential that the employment report tomorrow could trigger a bounce out of a daily cycle low. Again, it's just going to be a short-term bounce of something between probably 5 to 8 days, and then it'll roll over and it will break this. And then ultimately, we are going to test this last 3-year cycle low, and we're gonna go below this 3-year cycle low because we're in a bear market. So, and we should continue to be in this bear market till probably 2024 at least. And this is, of course, what is driving the bull market and everything is a collapse in the dollar. I'm pretty sure over the next, I'm assuming that this intermediate cycle is probably, it's only on week 13. It's probably going to run somewhere between 20 and maybe even as long as 30 weeks. So it could continue out here to March or April. I think that's going to drive that bubble phase in the stock market. I also think it's going to drive another leg up in gold. And then once we get to that next intermediate cycle low, that has the potential to maybe be a 3-year cycle low. Although I'm kind of the opinion that this 3-year cycle is going to stretch long, simply because the roles have to reverse as the dollar has started a secular bear market, then the euro is starting a secular bull market. So the 3-year cycle in the euro needs to right translate, and that's going to require this 3-year cycle in the dollar to stretch. So we may not get our 3-year cycle low in the spring when it would normally come due. You can see it. The 3-year cycle low in 2018 came in back in February. So you'd kind of expect the 3-year cycle low to occur in the spring of 21, but it may push out to 2022. So we may have at least one more intermediate cycle after this particular one bottoms before we get our next 3-year cycle low. Something to watch, and like I said, I think this is what's driving the bubble phase in stocks. And then once the bubble in stocks pops, central banks are going to print even more money, but it's not going to reverse, or it's not going to stop the bubble from collapsing. All that's going to happen is all that excess liquidity will just go into the commodity markets. And the really big trends will reverse. So the trend since basically 2009 has been a secular bull market for stocks and a long-term bear market for commodities. I think that's about to reverse. Once the bubble in stocks pops, then it's going to be time for a long-term bull market in commodities as stocks enter a bear market.